Welcome back. Joining us on the show now is Claudiu Covrig. He's founder and lead analyst at Covrig Analytics. Claudiu, hi. Thank you so much for your time. And first thing really is about the global sugar markets, which have continued to decline, trading at a 5-year lows right now, with an expectation that we perhaps could be looking at 4 million tons of an excess supply globally this time.
Yes, it's been, thank you for inviting me here. It's always a pleasure to be here with you. But these are hard times for global producers. Nobody is producing sugar now at profit. Everybody has to discount the sugar. And it's we don't know for how long this situation will last, but for sure, producer will not continue to sell below production costs. 4 million tons of surplus next season is not a big deal. From these 4 million tons, about 3 million tons remain locked in India. India might allow some exports, but now it's completely out of the market. And I don't see India exporting sugar, raw sugar, below $400, $410. This means more for low quality whites. So let's see for how long this situation will last. The problem was now that, okay, Brazil continued to produce a lot of sugar recently, and the stocks have increased there. But now in Brazil, production is going lower, and then stocks will go lower by the end of the year. Probably will be only at 7 million tons from 12 million tons now. So probably we will have a bit of support by the end of the year. Let's not forget about the funds that they are on a very short, net short position. They are about 200,000 lots net short. If they decide to liquidate these net shorts ahead of Christmas time, then to sit on some nice bonuses, then we can have a bit of more support. But just to remember something, not even Brazil, which is the cheapest producer of sugar in this world, can produce at actual prices. Even Brazil needs ex-factory at least, let's say, 13.5, 14 cents per pound. Then you have to take this sugar to the port. You have to add another 1 to 1.5 cents or even more for other meals. So you see, it's an unbearable situation. Moreover, in Brazil, now sugar is discounted at the port for November and December by about 30 to 50 points to New York 11. So you see, they want to get rid of stocks. Everybody wants to get rid of stocks. Everybody discounts a lot, but it's unnecessary. It's not really, I would say, a situation to continue. And then once these stocks are out of the market, probably prices will be a bit more supportive.
Claudio, until that happens, what is your sense on the prices from here? Because we already are trading at 14.5 right now. And just coming back to the point that you mentioned, that if India exports, we could perhaps be looking at further decline in prices. Is that what we are calculating?
Yes, I mean, okay, India will start producing now, and then a lot of sugar will come into domestic market. The allocation towards ethanol was disappointing this year. I don't think we can have more this year. So this means that all the pressure of the new volumes produced will hit the domestic market. Now, the government has to do something to release this situation. We don't know how low prices will move south from these levels. Let's say now we are close to 38,000 rupees ex-mil in Maharashtra. Should we go to 34,000? Should we go to 33,000 rupees? This will be a disaster, right? But even at 33,000 or at 34,000, India will still need at least 18 cents on FOB, or even more, 18.5 cents. So this means that there will be no Indian sugar unless this sugar will be discounted to the world market, right? And then who wants to discount? Who wants to sell in negative, below production cost, you see? So something has to happen. If indeed the world will need the Indian sugar, the world has to come up. The prices have to pick up to attract the missing Indian sugar. And we've seen on the low quality white trade flows that there is need for Indian sugar in Q1 and in Q2.
Claudio, thank you so much for joining in. Well, absolutely. That really seems to be the case right now. With the way the sugar prices seem to be trading, it is below cost of production, not just for India, but for most part of the world as well.
Absolutely, so that'll be something that we'll have to keep an eye out on going forward as well. Thanks so much, Manisha, for taking us through that conversation as well. But on that note, we are actually going to slip into a very short break. And, after the break, we'll have the management of Orient Pro Solutions talking to us about their Q2 numbers and outlook of the company. Stay tuned in.